Hi everyone, a very good evening to you. Welcome to page. So today we're going to be discussing risk management. Of course, in previous class I told us that risk management involves taking rational decisions about our trades, putting appropriate stops wherever possible, and taking off your profit at the right spot. Right, you want to take your profit where you are supposed to do so. You don't want to be so greedy to the extent that the market takes back the profits you've made, and you don't want to be also inefficient with your risk management such that you go ahead to risk everything you have in your account. So experts will always tell us that you don't risk more than 1% of your capital. So if you've got 10,000 bucks in your account as your trading capital, of course 1% of 10,000 bucks, it's 100 bucks. So you don't want to risk more than that. Okay, so today we're going to be looking at risk management. I'm going to be going straight to the mathematics. Okay, when you look at your charts, to the right hand side you find those graduated points. We call them percentage points. Those are pips. Okay, so those are actually the readings of the price. Okay, the price levels of each pair. Now, for example, you have a Euro USD pair, and but before then, you really want to understand that to the right hand side, those figures that you see to the right hand side they are graduated in an ascending order. So you're gonna find maybe 1.05, 1.06, 1.07, 1.08, just like that. So for example, if the price currently is at 1.0833 and Euro USD takes a bullish move upwards, and maybe in 3 hours time it was now trading at 1.0844. Now, when you look at that from 1.0833 to 1.0844, it actually has moved by 11 pips. So when you subtract the difference between the gap, when you look at the difference, actually 11 pips. So you're going to say this is an 11 pip movement. Okay, so that pair has actually made an 11 pip move upwards. Okay, if he actually moved from, of course, he made it. For example, let's assume he made a bearish movement from 1.0833 down to about 1.0822. That means he has moved by about same 11 pips, but of course it's a bearish 11 pips. So it's like it has depreciated by 11 pips. So that is exactly one of the aspects I want to cover today. So we've discussed about the percentage in profit, which is the pips. Also, you want to look at the number of decimal places. Now, when you look at that chart, you find out that those figures are graduated in 5 decimal places. So I need you to ignore the last one, because the fifth one is the what we call pipette. Okay, you want to concentrate on the first 4 decimal places. So just have that at the back of your mind. So we've talked about your pips. You're going to be looking at how many decimal places there, like after the points, like you have on that scale. Okay, now also you want to understand what lot size are you intending to use. Okay, we know that one standard lot size equals to about 100,000 units of the base currency. That's exactly what we mean by a standard lot size. Okay, I'm going to show you how we apply that. Okay, now after the one standard lot size, we also have a mini lot. A mini lot is 10% of a standard lot size, right? So if a standard lot size is about 100,000 units, that means a mini lot is going to be 10% of 100, that's 10,000 units. Okay, now that's for mini lot. Now coming down is you're going to be having the micro lot. The micro lot is 10% of the mini lot, or it's about 10% of the mini lot. Yeah, it's 10% of the mini lot. So If the mini lot is 10,000 units, then the micro lot is going to be 1,000 units. So now we have our number of pips. We also have our number of decimal points, okay, or number of decimal places for those of us that are so good with mathematics. So we also have talked about our lot sizes, right? So 3 of them. Now the next feature you want to consider is your entry price. Okay, now what's the entry price? You want to go, you're considering taking up a Euro USD pair at the moment, and looking at your chart, you find that Euro USD pair is currently trading at 1.833. okay, you want to note that entry price. That is a price. If you're going to take that trade at the moment, you're looking at those 2 green lines over there. Then when you, one of them is a blue line, the other one is the red line. So you're going to just note to take that trade at the moment. You're looking at those 2 green lines over there. Then when you, one of them is a blue line, the other one is the red line. So you're going to just note that price as your entry price. Okay, now having noted that, you're going to do the mathematics, and that's exactly the very important aspect of the entire session. One standard lot is equals to 100,000 units of the base currency, right? Okay, I also said a mini lot. A mini lot is 10% of the standard lot. So 10% of the standard lot is 0.10. okay, that's a mini lot, is about 10,000. Remember, it's 10%, right? Units of the base currency. So the micro lot then becomes 10% of the mini lot. 10% of the mini lot becomes 0.01, and which is 1,000, right? Good. Remember, we had noted decimal place, right? A decimal place. Remember, we're dealing with Euro USD. So this is gonna be 0.0001. Remember, we also noted the fact that we're going to be using, let's assume we're going to be using 5 micro lots. No, 5 mini lots. So 5 mini lots is 5 times 0.10, right? Okay, that is equivalent to 50,000 units to the right hand side, just like we had over here. So if 0.10, a micro lot, is 10,000 units of the base currency, then 5 micro lots is going to be 5 times 0.10, which is also 5 times this. So this becomes 0.50 equal or equivalent to 50,000 units, right? Remember, we were going to note our entry price. Now, Euro USD is currently trading at 1.0833. Now we're looking to sell. Let's assume we're looking to sell, and we're going to place our stop loss at 1.09933. That means our total number of pips becomes, we're going to place our stop loss at 1.09933. That means our total number of pips becomes the difference between these two, just like I explained. So 933 minus 833 is going to be 100. So we're risking 100 pips on this trade, right? So now I want to also what else did I mention we're going to note? I think we're done. So what we need to find out now is our risk R becomes decimal place multiplied by the lot size multiplied by number of pips divided by entry price. Okay, so now decimal point is 0.0001 multiplied by the lot size is 50,000 units, and you also multiply by 100 pips, divide everything by our entry price. Our entry price is 1.0833. So what are we risking? The mathematics students in the house. So what do you do? So having outlined all this, I think you have actually done what you're supposed to do. So this is actually the correct format for you to actually know what you are hoping to risk on that trade. So when you do the mathematics, you're gonna be risking 461.55 USD. So that's exactly what you have risked. Remember I said you need to actually risk just 1% of your capital. So if you are going to take this risk, that means you should be having as much as $46,155 in your account as your capital for you to be able to take this kind of risk. So if I say I'm going to risk this risk I've taken now, it's I actually used 5 mini lots. So if I want to use 1 mini lot for this same trade, I just divide my risk by 5. Since this calculation is based on 5 mini lots, so I divide by 5. So it'll give me about say 95 point some cents. So hope this was helpful. I'm going to do one more calculation so that we're going to assimilate this better. So I hope that calculation on Euro USD was helpful for us. I'm going to also share more videos, do more calculation on other pairs. Of course, the calculations for those of them that has the 4 decimal place, it's actually different from those of them that have about 2, like the CAD JPYs, the JPYs, and the rest of them. They've got about 2 decimal place, so it's a different calculation but similar. So I'm going to also share that in subsequent videos. So for now, have a good one.